Let's welcome on board then Nilesh Shah from Envision Capital and get a sense of what he's making of the market right now. Nilesh, hi, morning. Good to have you on the show. It's not been bad so far, Nilesh. The fact that we've recovered the way we have from the March lows, almost about 20 to 25 odd percent. Does it seem like the worst is behind us, Nilesh? Or do you think the market could get another shake if indeed the lockdown were to get extended later this week?
Yes, Aisha, I think it's been a reasonably good recovery from the kind of sell-off that we had witnessed in March. So to that extent, the rally in April has provided some relief. Obviously, this rally has been driven by more like kind of a bounce back and some of the kind of liquidity infusion measures which central banks world over have infused. And I think in India too, essentially, I think the RBI has done a fantastic job in terms of providing tremendous amount of liquidity. But I think clearly going forward from here, this is essentially the kind of levels or the range which I think is going to be not very easy for the market to basically traverse. This is essentially going to be a relatively difficult terrain to basically move forward because clearly it looks like that there may not be a complete opening of the lockdown, and it is going to be basically a phased out one. It looks like that most of the urban centers will probably have lockdown in some form or the other. That's essentially what basically the indications are. So I think we'll have to wait and see how soon basically the exit really happens. And I think clearly the first quarter is going to end up being a very, very challenging quarter. So what it looked like as some kind of pain just for the initial weeks of April will probably spill over into May as well. And that will surely impact the Q1 performance of both companies as well as the GDP at an aggregate level. So clearly, yes, what we need to really watch out for is essentially now how soon essentially the exit from the lockdown happens. And that's going to be the most important event. In addition to that, of course, things like the economic stimulus, what sectors the stimulus is focused on, the quantum, the time period. I think clearly these are some of the things to really watch out for, and that will essentially decide the course of the markets in the very short term.
Oh, yeah, absolutely. While we await, any news flow on economic package or for that matter, news and lockdown as well, Nilesh, do you think there are niggling worries like the episode with Franklin? I know it may be an isolated case, but that definitely sort of opens the Pandora's box on what happens to retail investors, and do they now begin a series of redemptions across other debt funds as well? And would it at all trickle into some of the equity schemes too?
Well, clearly the episode of last Friday, I think, is being very unfortunate. I think it comes in again at probably the worst possible time frame. This is essentially the time in which the confidence in the financial system should be intact. And I think all that we can hope for right now is to basically this episode to not spill over into the similar schemes of other AMCs, or for it to not spill over into the equity side. Our sense is that broadly, yes, I think the pain on the credit funds segment of the mutual fund industry continues. But I think a lot of investors there, or bulk of the investments there, would essentially be from the high net worth individuals or the super high net worth individuals. But very unlikely that will spill over into the equity side. That I think is very unlikely. I think investors are fully conscious, fully aware that these are segregated products. These are different asset classes. So very, very unlikely that I think this can spill over into the equity mutual fund side as well.
Sure. As an investor then, Nilesh, what is it that you've done in the last month and a half? I mean, how is it that at a time like this, when you're seeing just about everything, go kaput around you, do you maintain your sanity? And what is it that as an investor, do you do in this market now?
Right. These are times for equanimity. These are times basically to, in the sense, be very careful, be very prudent. I think it's important that you really kind of now identify the opportunities and the individual stock investment cases on a very, very selective basis. This is essentially not the kind of usual corrections or the usual crashes that we've seen in the past. this essentially has been a correction which is basically getting driven by the impact on the real economy. And I still think it is very premature to kind of completely assess the impact on the real economy. And we really don't know whether essentially we are going to have basically an extended degrowth or not. And I think that becomes very, very important. It also looks kind of a high probability that the next few months will remain challenging. They will remain volatile. So I think it doesn't make real sense to basically get carried away with some kind of pullbacks in the market. We've still been holding some bit of cash that we have in our portfolios. We've still been holding that cash. And also basically kind of looking at some of the rallies to essentially either prune or exit some of the positions that we think could potentially underperform going forward. And continue to be more constructive and watch out for pockets like in the healthcare sector, the life insurance, the general insurance sector, pharmaceuticals, consumer staples, health, wellness. These are clearly the bunch of opportunities that we're getting even more and more constructive about. And I think we would probably use any corrections to still kind of load up around these pockets of opportunities in the marketplace.
Would it be a selective approach, though, or more of a basket buying, Nilesh, when it comes to pharma as well as the allied healthcare space?
It will have to be a very, very selective approach. I don't think this is essentially, because especially in areas like pharma, every company has its own growth strategy. Yes, in the initial leg of essentially an up move, you basically see all kinds of companies kind of move up with the name of pharma or life sciences attached to it. But clearly one has to be very careful. Of course, there has been some bit of rally in stock prices as well, and maybe a lot of optimism is getting factored in. Keep in mind that some of the pharma companies will also have supply chain related issues. Some of them could have had disruptions as well. They don't have a problem of demand, but they could probably have had problems of supply and logistics. So one has to be very, very careful and not get too carried away. One also has to kind of look at the geographical distribution of their revenues, whether it's essentially India-centric, is it centered towards the US and other regulated markets, or is it around rest of world markets, or is it around formulations, API, mix? So to that extent, I'd probably say that it is one of the most diverse and complex kind of sectors to be in, and therefore one can't really take a complete one sector view, but one will have to be very, very selective about the individual opportunities. The other thing also I must kind of really say, and I'm taking this opportunity, that I think a few weeks back, there was a lot of enthusiasm around hydrochloroquine, but what one is already beginning to hear is that I think the US FDA had already sounded a word of caution in terms of unchecked use of hydrochloroquine. And I think a lot of stocks had even buzzed around that and moved up around that. So one has to be very careful and not to get carried away. And probably use some corrections in this to basically invest into very, very specific companies in this space. In the meantime, of course, we've been very positive about some of the consumer companies, which are again into nutrition, personal care, and wellness segment. I think right now, for now, that I think is a much, much more robust and a sustainable opportunity. And one should basically start looking at names in there, which are not so much prescription driven, but are also essentially OTC driven. So I think that's the way to look at it. In addition to that, I think health insurance, again, I think is a very, very interesting opportunity. And clearly, I think there are reports that even half the population still does not have the desired level of health insurance. And clearly, that is one space, one sector, which is end up going to be a significantly larger beneficiary of the current episode and the current turn of events. So I think, yes, there are different ways to play health and wellness, and I think one has to be very selective.
Sure. Nilesh, you monitor the IT sector very, very closely. What is it that you've made of the commentary that the managements have set out? While TCS managed to stick ground with its guidance and said that they have visibility by the calendar year end, by December, Infy on the same hand said that will provide guidance once they have clarity. And, they're saying that they are unable to give any guidance this time around, be it in margins or for that matter, their revenues. Do you think think it's inevitable that some of the IT companies as well will face the heat because of the global slowdown post-COVID? There will be those revision in client spends, and client orders would actually, sort of evaporate.
So clearly, the best way to really look at the IT services sector is to really see what happened during the global financial crisis in 2008-9. And clearly back then as well, really the sector on a very aggregate basis did essentially get impacted, and for probably a quarter or two, even then, they basically had probably a degrowth in their revenues in dollar terms. But of course, at that point of time, the depreciation of the dollar, the depreciation of the Indian rupee and the strength of the dollar was so stark that by and large, most of them ended up essentially later on gaining much more with that depreciation of the rupee. This time around as well, I think the IT companies have been relatively prudent in refraining from giving any specific guidance, leaving probably an exception here or there. And therefore, the next 1 or 2 quarters are going to be very challenging for them. It's clearly I clearly think that I'd be surprised if they do not have a single-digit degrowth out there. But keep in mind that I don't think it's kind of in a way, a permanent loss of business. A couple of silver linings out there. Number one, if we look at really the deal wins that some of these companies have had in the quarter ended March, I think these deal wins have been fantastic. And therefore, that kind of, in a way, breeds optimism for the future that yes, the next 2 quarters or the first half of this financial year is going to be challenging for them from a revenue point of view. But beyond that, spending will come back. They have the deal wins with them, and it's just a matter of time before essentially the revenues start ticking in. So clearly, for the next 2 quarters, I think it's going to be challenging. But beyond that, the prospects again look very good, and therefore I think as long-term investors we would want to basically use the dips in the first 2 quarters or dips or further correction in stock prices to basically identify the winners in a post-COVID world. And that is what we have to keep in mind. Keep in mind also that during the GFC crisis of 2008-9, a lot of these stocks came down to very, very attractive valuations. And I think that's what one has to basically look at. That look for opportunities where really there is scale, there is efficiency, and the valuations have become so attractive that obviously from a slightly medium-term perspective, the risk-reward turn hugely favorable in your side. So I think short-term, one should be guarded, one should be careful for the technology sector. But I think beyond the next 2 or 3 quarters, they would recover and probably be back onto their growth trajectory.
Nilesh, besides staples, the one thing that none of us can live without during this lockdown and these times actually is clearly telecom. And now with the Facebook deal, clearly, the sector has got this renewed lease of energy. Do you think that this has to be part of your core portfolio, either Reliance or Bharti, or even for that matter, if you want to take a look at Idea, assuming that you don't think that the sector is still headed towards a duopoly?
Well, there are 2 things here, and I think it's probably a bit of the reverse of what I just kind of alluded to on the technology side. That probably for the next 2 quarters, this is going to be a very, very robust sector because essentially they probably are the most immune or the least affected by the slowdown. Data consumption continues to be strong, and then mobile usage continues to be kind of unchanged. So to that extent, I think the next 2 quarters basically should be pretty strong or robust for the sector as a whole. The recent investment by Facebook into Reliance, I think, is a huge positive. I think it speaks volumes about both the potential of India and essentially the capabilities that Reliance Industries and Jio have built. So to that extent, I think it's a huge, huge positive. I think what is very, very interesting in the case of the Reliance Facebook is essentially how this partnership evolves and goes beyond just telecom and gets into basically consumer technology. That I think is essentially the ultimate intent of this partnership. And so to that extent, between the two, I probably would be more positive about owning Reliance Industries versus Bharti, as I think that Bharti will probably remain a pure telecom play, whereas I think Reliance Industries gives you the ability to kind of look at it more as a retail play, as a consumer play, and finally also as a consumer technology play. And I think clearly it probably offers some kind of an unprecedented kind of an opportunity that it is addressing for the future. So I think whenever you see, I mean, of course, off late the stock has done extremely well, but maybe I think for really long-term investors, one should keep in mind that yes, this is a fantastic partnership which is going to address a huge, scalable, multi-billion-dollar opportunity, and maybe can be constructive on it when there are price declines, because yes, of course, they will also get impacted by basically the fall in crude oil prices and therefore impact on refining margins. So I think there would be some opportunities to kind of down the line in price terms to get more constructive on Reliance. So yes, I think pure telecom, I still think I would avoid from a long-term perspective because the sector still continues to be regulated and things of that kind, and it's almost a completely penetrated sector. So I'd probably avoid a standalone telecom play and be more constructive on a consumer technology play.
Okay, Nilesh, thanks so much for taking the time out, and hope the lockdown's treating you okay. Do tell us, how is it that you're passing time? Read anything interesting? Taken up any online courses?
No, I think it's clearly reading. There's been a huge backlog of reading, and I think I'm glad that I've been able to basically clear a lot of that backlog. So a lot of interesting stuff, interesting reading, interesting books, and all of that. So in a way, that's essentially the brighter side to the lockdown on a very personal note.
Oh, yeah, that's true about all of us. Good chatting with you, Nilesh, as always. Thanks so much for taking the time out.